Let's make the most of 25 minutes. Let's do business around the world. This is Business Incorporated, and here's what we have prepared for you. We start off in Egypt, where remittances has ticked up. Those working abroad are sending in more money. Meeting up with the 31st December deadline, Kenya authorities are scrambling to close the gap in coffee farming. And in Uganda, they are getting about 4.5 million euros through the food program because of Ireland's contribution. You're welcome to the program. I'm Ini John Mekwa, and we start off with what's going on in the oil and gas space. Prices fell on Tuesday ahead of another anticipated production increase by OPEC Plus, and as resumption of oil exports from Iraqi's Kurdistan region via Turkey reinforced market expectations of a supply surplus. So the picture or the numbers look better than what we had in the morning, because in the morning we had almost 1% in the red, especially for Brent. But this afternoon we see there's been a little reduction in the losses. It's now at 0.6%, but the price is still hovering around $67 for a barrel. WTI is also still in the red. It's at $63.06 a barrel. And drivers of this OPEC Plus is a major one. The drops extend Monday's falls when both benchmarks as WTI and Brent, they had settled more than 3% lower after their sharpest daily declines, and selling pressure has intensified with that OPEC Plus decision, which has been hinted to the public. Leaving the oil and gas, gold fell on Tuesday as investors are booking profits after prices hit a record high earlier in the session, while concerns of a U.S. government shutdown and increased bets of a Federal Reserve rate cuts limited losses. We'll look at the numbers now. It's red, all red. Spot gold is down, but it's still sustaining 3,800 that it hit yesterday. It's at $3,831.30. U.S. gold is also still within the 3,800 level, but it's lost 0.7%. Spot silver lost more than 1.5% at $46.29. Here we have more than 2% cut for platinum, but it's sustaining the price at $1,596, while palladium also lost more than 2%, but the price is still around 1,260. Markets expected 89% chance of a 25 basis point cut reduction at the Fed's October meeting. So all of these are considerations that investors are highlighting at this time. Let's leave the markets now and see what the government of Ireland is doing. They've announced a contribution of 4.5 million euros, that's about $5.3 million, to the United Nations World Food Programme in Uganda to strengthen the resilience of communities in Karamoja and refugee-hosting regions. The renewed partnership combines food assistance, school feeding, livelihoods, and social protection activities to support approximately 1 million vulnerable refugees and Ugandans in Karamoja, where food insecurity remains high. This contribution will allow WFP to procure food for school meals, stimulating local economies, and WFP will also enhance community resilience by restoring degraded land, promoting crop diversification, and improving post-harvest management. WFP will support the Ugandan government in extending social protection programs to better prepare for shocks and natural disasters, such as droughts and floods. In Egypt, the Cabinet Media Center has released several infographics highlighting the record surge in remittances from Egyptians working abroad and their crucial role in enhancing the stability of Egypt's international reserves. The historic rise in these transfers is attributed to the Central Bank of Egypt's sound monetary policy, they say, which has helped stabilize the exchange rate and boost confidence in the economy. This, in turn, they say, has positively impacted net international reserves and the state's ability to withstand external challenges. The infographics trace the evolution of remittances, showing they have more than doubled over the past 10 years, soaring to $17.1 billion in the fiscal year 2015 to 2016 to reach $36.5 billion in 2024-2025 Remittances notably reached approximately $3.8 billion in July 2025. That marked the highest monthly level ever recorded. The data also showed previous annual figures, 21.9 billion in 2023-2024, 22.1 billion in 2022-2023, 31.9 billion in 2021-2022, and 31.4 billion in 2020-2021. In Kenya, the Revenue Authority has introduced a new tax system that's aimed at collecting more rental income taxes from property owners and landlords across the country. The new system was introduced at a time when the government's principal revenue collector lamented the nation's low tax collection rates from property owners and landlords. As mandated by the law, the portal, known as the Electronic Rental Income Tax System, will now allow landlords and property owners to pay taxes efficiently. And we're still in Kenya now. The clock is ticking towards the December 31 deadline. Kenyan authorities are scrambling to digitally map the country's coffee farms in compliance with the new European Union deforestation regulations. That's the rule that they're supposed to work with from the last day in December. The high-stakes effort aims to demonstrate to the European Union that Kenyans prize coffee beans exported to its member states are not grown on land designated as forest, requirements that could determine whether Kenya's coffee continues being exported to one of its most lucrative export markets or not. Under the regulations, coffee grown on farms affected by deforestation after December 31, 2020 will be excluded from the lucrative EU market. The exercise is being coordinated by the Agricultural Food Authority, county governments, and Kenya Forest Services, as well as the Kenya Agricultural and Livestock Research Organization, among other agencies. AFA Director General says that the guidelines requires all companies exporting agricultural products to the EU to prove that they were not produced as a result of deforestation. We're still talking coffee now, but it's in Ethiopia, where the country's Tea Authority has announced an aggressive plan to strengthen the country's coffee sector this year, with a strategic focus on substantially improving both quality and quantity to sharpen its international competitiveness. As part of this drive, the Ethiopian Coffee and Tea Authority inaugurated the Dealer Coffee Quality Inspection and Certification Center, and that's the first of its kind in the region. The facility is expected to ease the burden of coffee suppliers by shortening the trade chain, reducing costs, and improving efficiency. Let's leave coffee for a bit, but we're still talking about commodities, and today we're talking about okra. It's one of Nigeria's most consumed vegetables, very silent, but very valued. That's what we've seen about okra. In recent times, we've seen prices have been volatile, ranging from between 1,100 and 1,560 for a kilogram at retail, with wholesale bags averaging 5,000. And given this widespread household use in soup and stews, how will this sharp price movement affect overall affordability, and will it change the tastes of Nigerians? We are speaking to Amira Yakubu, who is an analyst with Financial Derivatives Company on this. Hi, Amira. Good afternoon and welcome to the program.
Hi, good afternoon, Amy.
Yeah,
Thanks for having me.
Good to have you. So okra is one essential and yet very silent. One would have thought that it's not so popular. Can we test the popularity of okra in households in Nigeria?
In high what?
The popularity, how commonly used is okra in households?
Yeah, okay. Thank you for the question. So firstly, I would like to state that okra is widely used in most households in Nigeria due to the fact that it is affordable, and it also requires less ingredients in its preparation, making it cost effective. So it's always found in an average Nigerian food basket. So if you're looking at the price, it has surged over the period of 1 year from about 15%, now at the rate of 1,100 naira per kg. So it is an inferior good which is going to be consumed by most households because in the market we can still find okra at the range of 200 naira, 500 naira. So people will still consume that. People will still consume that, and we've seen that most individuals now spend over 70% of their income on consumption of food. So looking at okra as something that you can use to cut budget, people find themselves consuming that, and you can also derive satisfaction from the commodity when looking at it with that of the substitutes like iwedu and the likes, which are on the high side. So okra is widely consumed by a lot
Mm.
of Nigerians.
So when we look at the report that says that Nigeria produces about 16% of global output of okra, I would have asked, are we really making the most of this huge production of okra that we have, at least the potential of it?
Well, the reason to that is we have the potential. We are catering to our domestic market. But then when we look at a global scale, we see that it's a very um, um, an abysmal exports that we are putting out there. This is because of some structural bottlenecks, and also the country is facing issues in terms of poor infrastructure facilities, storage facilities, and transportation. But anyways, we've seen recent efforts to curb that. In the sense that we've seen that states in Bauchi, Jigawa, and states like Bauchi and Jigawa are already doing things to push the exports. Government have been investing in irrigation such that they want to produce more volume in goes beyond the raining season. Also, addressing issues in terms of um, addressing issues in terms of security, because we see that once we produce large volumes of okra, we see that a lot of them are being spoiled. And if you buy okra at the rate of 200 naira, you see that one quarter of it is already spoiled. So these are things that the government is already doing to curb that. And another thing is the government should also work towards quality standards in terms that there's a growing market or demand for okra in countries like Europe and the Middle East. So the government should look towards striving the quality standards to increase exports there.
Yeah,
So
Amira,
I think
I guess, I mean, the picture you painted also speaks to the need for storage, facilities, and preservation for export and all of that. And these are also opportunities, apart from the government, these are also opportunities for investment. I guess, apart from the government providing these things, it's also for the government to make it attractive enough for the private sector to jump in, create some of these facilities in the value chain of okra, and at the end of the day, we might have extra revenue from exports.
yeah. So we've already seen that the governments are actually doing some things into provision of infrastructure. Like I stated, they have already done that in three states, Kaduna, Jigawa, and Bauchi, but it's still abysmal. And also there's an inadequacy of the linkages to export market. So once they can attack those issues, then I think things will be better. Then also in terms of storage facilities, the government um, should strive towards putting in place those structures so that we can mitigate post-harvest losses. So these are things that can help us in the long run by becoming the largest okra export. Yeah.
Okay, hopefully we will make solidify our position as the 16th largest producer, and then we can talk about the export. But thank you so much, Amira Yakubu, analyst with Financial Derivatives Company, for your time.
Thank you.
Let's go to the markets now, and for Nigeria, we still see the green color being retained at intraday today. We see sustaining the 142,000 level at 0.28% for the oil share. However, for Johannesburg in South Africa, it's turned red, even though at 107,000, which they were at this time yesterday, but it's lost right there. Egypt is in the green, 0.68%. And Nairobi closed yesterday in the red, deeply in the red, losing the 107 level that it had gotten by Friday. Look at all the markets now. The Middle East is next. Dubai is negative 0.24%. Abu Dhabi is positive. Saudi Arabia is positive, as well as Qatar looking good at intraday. In the United States, the stock futures rose on Monday as Wall Street tried to regain its footing after a week in which the artificial intelligence trade lost some steam. So we see the Dow Jones is in the red, S&P in the red, as well as Nasdaq. In Asia, where market has closed, China's official reading showed manufacturing activity contracted. So we'd expect a lot of red. Nikkei is red, Kospi is red, Hang Seng, however, managed to get into the green. But let's talk to Chiponda now, find out what's happening in the European market this afternoon. Hi, Chip. Good afternoon. What's happening in the markets today?
Well, any European markets are pretty much flat today, and the Eurostock 600 is only up around 0.1% after trading in the red earlier in the day, actually. And Germany's DAX is also up around the same level. That is, of course, despite German inflation jumping to 2.4% in September, which is, of course, the highest level that we've seen of inflation this year. But that hasn't rattled investors. They are still keeping their eyes on Washington. Of course, on Monday, Republicans and Democrats failed to reach a funding agreement that could delay a government shutdown, which could begin as early as Wednesday. Now, investors, of course, do fear that that will delay the release of key jobs data on Friday. And of course, that's not all. It could also complicate the outlook for the Federal Reserve, which cut interest rates earlier this month. Now, while European shares are set for actually a gain of nearly 1% for all of September, the fact that we could see a government shutdown in the United States could, of course, maybe slow down that momentum for European markets as well.
Yeah, well, that shutdown, Chip, we've talked about shutdown in the US for years, but it never really comes. So I do hope at the dying minutes there'll be a compromise and then it will be avoided as usual, because we know Americans always do that. But away from there, and not so good news for startups in Germany. It does seem that they're losing some of their shine. What's going on?
Well, it is a mixed picture for the German startup scene, Ini. There is some good news, and that's what I will start with. That is that Germany's image has improved, at least compared to the United States, which is, of course, less attractive than it used to be. Now, that's, of course, according to the German Startup Association's Startup Monitor. Now, for founders who are based here in Germany, the Trump administration's policies are seen as extra business risks. And, of course, those include the tariffs and the changes we've seen to immigration rules in the United States. Now, Germany, on the other hand, is seen as a more stable country. But for the bad news now, the number of startup founders who would consider starting another business in Germany is actually down. Now, the Startup Monitor survey showed that only 78% of founders in Germany said that they would start a business here again. And that is actually down from 9 in 10 in 2023. And that is, of course, partly due to the red tape and lower access to capital in Germany.
Hmm. Well, no, it doesn't sound very good there. But what sectors are actually attracting more investment, even though some say they wouldn't consider restarting or starting another business there?
Well, the sector that is growing exponentially, Ini, is defense. And the German Startup Association says that in the first 8 months of this year alone, 878.5 million euros were invested in defense related startups. Now, in 2020, just to give you a sense of where it was only 1.3 million euros. So that is exponential growth in that industry. And that is because the German government loosened the debt brake in March with a plan to inject hundreds of millions of euros in defense spending over the coming decade. And it's, of course, not just traditional defense companies that are cashing in. Startups working on drones, laser systems, and artificial intelligence, which of course are also technologies that could have military applications, are also benefiting from the surge in investment in defense. But despite that, of course, there's still challenges, and it is getting access to government funds. Procurement in the defense industry can take years because of the long government tender process, and that is obviously not ideal for startups in the country, which could end up running out of cash before they make products for the market.
Yeah, but Chip, can we say this is connected to the war in Ukraine? The fact that the war economy seems to be booming?
It is sad to say, but it is, of course, and which is why the government has released those funds for defense spending. It's all about the war in Ukraine and making sure there's also the turn that we've seen from the Trump administration in terms of them asking Europe to do more for itself. So there's a demand also from the United States that Europe should be able to defend itself. And of course, the Europeans have understood that. So we're seeing more investment, not just in Germany, but also across the European Union. So that is, of course, something that is benefiting the defense industry, which, of course, is also good for other industries that can develop technologies which could be used by the military.
Yeah, thank you so much for that, Chip, for giving us, broader outlook or to that. Thank you so much. Enjoy the rest of your day.
Thanks, Ini.
All right, let's see what's happening with crypto. We see that BTC is retaining its green color, but it's lost about $1,000 here compared to this time yesterday. But it's still up almost 1% gain in 24 hours. Ethereum is also retaining the 4,000 level, $4,000 level, gained more than a percent and a half in the last 24 hours. BNB, Solana, TRX. We have more reds today, but we still have a handful of greens. Looking at the color, of course, everyone is following what's going on in the Reserve, Federal Reserve, the minutes, what to expect, how many more cuts, and all of that. But let's see the stories making the headlines. We see that Binance receives $200 million USDT whale inflow, a massive amount, they call it, into Binance, has injected fresh momentum into crypto market, signaling strengthened liquidity across exchanges. And the stablecoin influx arrives as Bitcoin trades around the price that we saw, 113,000, with analysts watching closely for sustained support and possible bullish action ahead. That's our first headline there. And Circle links with Deutsche Börse stable coins. More stable coins coming up. This one has gained a major foothold in Europe. So Circle and Deutsche Börse forge a new partnership to integrate USDC and EURC into Germany's market infrastructure. Of course, even here in Nigeria, we're hearing a lot of news about stable coins. I wonder if it is the currency for the future, but we will see. And then also we have a woman convicted in 5.5 billion euro crypto seizure. I think they say it's one of the biggest one, a landmark verdict that has been delivered. It's believed to be the world's largest cryptocurrency seizure. And the woman is known as Yadi Zhang and has been convicted following a long-running investigation into a 5.5 billion euro Bitcoin fraud. The case traces back to a 7-year probe by the Metropolitan Police into the laundering of criminal assets, culminating in the confiscation of 61,000 BTC, making it the largest single crypto asset seizure till date. So these are the top stories from the crypto side for today, or at least at this time. And yes, the price of Bitcoin is still in the green, but not as green as you would have preferred for it to be. But who knows? It might just be waiting for you to come on board if you see that as a viable investment at this time. Well, that's it on the program today. Thank you so much for being a part of Business Incorporated. Again, today we will bring another episode, of course. Oh, tomorrow is Nigeria's independence anniversary, 65 years of independence. So you can watch Channels Television. It will keep you up to date. We have programs that will inform you and help you celebrate the day, but won't be having business programs tomorrow. We'll see you on Thursday. We have something cooking for you, so you don't want to miss 10 a.m. on Thursday, October the 2nd. You have a very special episode of Business Morning right here in our studios. You don't want to miss it. I'm John Mekwa. Do take care.